Welcome
Blog
to
Talk
Stock,
Radio.
welcome to StockMarketFunding.com, and this is the show that's going to be based on how Euro and Merkel eyes a solution. The EU battles to save the Euro as Merkel eyes the solution. Basically, what this is about is a Euro debt crisis and how that you will protect your portfolio moving forward, and what is the risk for 2012, and how do you manage risk and market volatility is that the U.S. equity exchanges have been held hostage to this European debt crisis. Now, I will update a little bit about what happened today. The Dow was down 198, NASDAQ 100 was down 37, S&P down 52, and S&P 500 has a reversal down 26 on the day. What we would like to really point out very clearly is how do we protect ourselves? How do we protect our portfolios? How do we protect our trading accounts? How do we protect our investments? What will the growth to the U.S. versus the Europe crisis end up being in the forward-looking analysis that StockMarketFunding.com has put together? We would like to talk a little bit about what their thought patterns were today. They have a big meeting that's going on right now, and the European leaders battle over the fate of the euro and the last-ditch efforts to stem 2 years of turmoil in financial markets and put the debt added behind them and gain some kind of economic footing. Now, these were the same European banks that over 2 years ago, when we were trading the markets, the U.S. came out during the financial crisis in 2008, and we did a stress test in the banks here in the U.S., and we recapitalized them through the TARP program. Now, we have a double TARP where all of these European banks are in trouble. But remember, these European banks are the first ones that said that they had all passed their stress test a couple years ago. StockMarketFunding.com said 2 years ago our analysis was going in toward the end of 2011 and 2012. We have all the documentary and the live videos to prove it before the fact, and how that later on that this could possibly come back and haunt Europe, and not only that, how it would spill worldwide and into the U.S. One of the things is that today is why markets are not buying into it. We've had a great volatile process in both the long side of the market and the short side of the market. Most high professionals can't even transact because they don't understand that volatility and the risk management that one will use. Today, what they're talking about, the International Monetary Fund started to fall into place as French President Nicolas Sarkozy warned there will be no second chance. Well, there won't be, because there's a huge black hole that the financial system is in, again, in the European zone. But 20% of our S&P is weighted to those earnings, by the way. In the absence, they're saying, in the absence of a credible crisis, that it's a credible crisis, that they've got to get a strategy from the summit that began today in Brussels. And when they're there, they're trying to get this strategy now. Now, here's their part of their strategy. Merkel of Germany, Europe's dominant economy, they damped those expectations, saying that the euro's credibility has suffered, and calling the 15th summit in 23 months part of a step-by-step solution to the crisis that has cast doubt, uncertainty on the currency survival. European leaders today began open-ended talks over dinner. Now, let us not forget that Mr. Geithner is over there, and let us not forget that a couple of weeks ago, Bernanke and other worldwide central bankers got together to make this big capital TARP injection. We'll go over that in a little bit later. But here's the thing. They're going to talk about it over dinner at 7:30 p.m. with no pressing. They're not pressing themselves enough, in my view. They are going to put together a political and legal and economic constraints. This is what Merkel wants. She wants some political, legal, and economic restraints. um, to deal with the financial markets in a bid to craft a fifth comprehensive package to stamp out the crisis that began with the Greek government discovering an unexpected budget hole in October 2009. Well, we had told everyone about that. Spanish and Italian bonds tumbled, and the STOXX Europe 600 index lost 1.5%, reversing a 1% advance. Some investors reined in expectations about the summit's outcome. What does it mean? It means that they don't believe the outcome, otherwise the Dow wouldn't have been down 198 handles today. Whether the meeting wraps up on a schedule tomorrow's going to be the big day, and runs into the weekend, which they always do, that would hold the market hostage into the weekend and to the longer term. Now, the leaders are likely to leave Brussels with much business unfinished. Planned amendments to Europe treaties won't be pinned until March of 2012. And that may take several more months to put together into law for these people. In addition, the independent European Central Bank, the European Central Bank, would rapidly supplement its 207 billion euro bond buying operations in response to the summit announced the steps toward a closer fiscal union. Well, a closer fiscal union. Sorry, it's not going to happen. The ball is still in the politicians' court, increasing pressure on EU leaders to come up with longer-term solutions for debt crises. Longer-term solutions aren't going to be good enough. If they don't remove that toxicity right now, and that spills over into the banking system, and people want to start redeeming in Europe, pulling out of their money out of the banking system, in my view. And not only that, though, more importantly, is how am I going to protect my assets that are in markets? And how am I going to protect investments, or how am I going to put my short-term trading, and how am I going to put my risk management on based on all of this? And what I would like to tell you is that now we're going to have to make laws and make all of these kinds of things, which is all good and well. But right now, ECB war chest. The ECB war chest. Italian 10-year bonds slid the most in almost a month today, pushing up yields by 44 basis points to 6.43%. Bonds on other high-yielding countries also fell as investors sought the relative safety of the German debt. However, the yield on the 10-year Bunds, B-U-N-D-S, not bonds, bunds, declined 9 basis points to 2.01%. The euro was down 0.7% on the day at 1.3318. And make sure that you watch that FXE. The thing about it is, in our view, the ECB provided breathtaking space today, trimming its main interest rate by a quarter point. So they dropped a quarter point interest rate. But what about the treaty change? ECB measures sought to alleviate the impact of the debt crisis on the banking system, now in need of 114.7 billion euros in fresh capital. According to the European Banking Authority, if you can believe them, they announced that today. European leaders will have to raise a total of 8 billion euros, more than estimated by the EBA. Oh my goodness, and that was in October, by the way. Greece and Portugal drawn a combined 256 million euros in the European and the IMF loans, and Greece counting on 130 billion euros more. The government leaders' focus shifted to preventing future budgetary crackouts by reinforcing the Stability Pact. Well, good for that. How about that? That Germany convinced in the 1990s, which they did, and watered down in 2005, because they did. What's important for me is that the euro can only win back its credibility if we change the treaties. And that's what they're talking about. That takes time. And I can tell you what, this market could just sink. Because what happens is, if the banking system locks up, there's nothing they're going to do. Merkel said before the summit that was the core for her, is to be able to do these things that were done once before. About more solidarity is that look at the Standard & Poor wants to downgrade 15 euro governments because they do. We need more solidarity in the Eurozone and more discipline. Sarkozy said that in a pre-summit meeting of conservative leaders. Europe is an extraordinarily dangerous situation as it is, and we said this a long time ago. How do I protect my portfolio? How do I use risk management? info@stockmarketfunding.com. We will teach you how to survive and make money in these financial crises that we have been covering all our life, and this particular one is more than any one or any other one that we have seen. So what I would like to say is there are, in their fiscal enforcement system, in the absence of an accord of among all 27 euro governments, that go-alone threat is a threat in some cases because the part that's a threat, in a joint letter to European leaders yesterday, Merkel and Sarkozy set a March 2012 deadline for an agreement on treaty amendments, calling on Euro states to set up their own fiscal enforcement system in the absence of the 27 euro governments. That go-it-alone threat, plus a call from the financial transaction tax setup, a showdown with UK Prime Minister Mr. Cameron, head of the biggest EU country still using its own currency. He's not very happy. He comes to Brussels vowing to defend London's status as Europe's premier financial market. Now, Britain's interest is we need obviously to get that stability in the euro. They're not right now, in my view. However, they think that that's good for the European countries, good for Britain as well, which it is. The consensus is emerging to speed the setup of a pre-market rescue fund. And what is that? The 500 billion euro European stability mechanism. Oh boy, tarp it up. It's like, what do we do? Even if we get that is going to take them, that is likely to go into operation, though, in late 2012 instead of mid-2013 as originally planned. So later in 2012, they've sped up the process in that respect. But let me tell you something about the European Financial Stability Facility. That's a new little gimmick. It's nothing different than taking toxic assets and covering them up. Now, Timothy Geithner, on the final leg of the 3-day trip to Europe, has urged policymakers to work with the central banks to Iraq. They need a very strong financial firewall. The leaders of Europe are moving this week. However, they are moving all right, and they're talking okay. And I can tell you something about this European Financial Stability Act. That's EFSF, okay? And it's a European Financial Stability Facility. All right, they're going to be playing a big role. And beyond the ECB analysis is that there is a mission of the EFSF issue bonds or other debt instruments on the capital markets. And that's how they cover all of these things up, is by injecting that liquidity in the system. But one cannot count on Europe. We have been held hostage to Europe for the last couple of months in these markets. And people that hold portfolios and big firms have gone under. Look at MF Global. Not to mention that we believe that other big banks and European bankers, but not more importantly, is some big trading firms. How about Deutsche Bank in Germany? They're at high risk. There are other major banks and broker-dealers like Lehman, Bear Stearns, remember them? How about Merrill Lynch? That went down and got bought out as well. Look, there's going to be a lot of financial turmoil moving forward. The thing about it is that we continue to sell into stock market rallies, and when these things create the kind of volatility that they create, there is ways to make a fortune on these things using that volatility. That takes some training. But what are you going to do to protect your life? And what would this look like in about 9 months from now? Okay? And the thing about it is that in the shorter term, the Federal Reserve in the United States is playing a big role in this because we are tied to that Europe. Now, as far as investment management, trade management, futures trade management, options trading management, investing management, stop risk management, and lots of other various different managements that our yearly school teaches on a yearly level, is on a daily level, and certain workshops that we have on all of this helps you prepare to protect yourself from the downside of these events that could be very systemic. Now, growth goes lower because the S&P 500 is 20% weighted to Europe. That means that in the next couple of quarters is that we would be looking for a decline in the earnings. And the thing about it is, I'm going to take a couple of calls to answer the question on a couple of big traders that need some kind of advice on how to protect themselves and what this means. It means that the systemic risk, if things were rosy, you wouldn't be having all of this. You wouldn't have Bernanke getting involved. You wouldn't have all of them meeting together. This crisis is at a systemic depression risk, and it is. And the thing of it is, you can put a Band-Aid on it for a while. They just put a 2-year Band-Aid on it, and it failed. And we're right there right now, 2 years later. And I can tell you that the quick fix is never going to be a fix. It never has been. It never will be. It doesn't fix anything. It just makes things worse down the road. What I will do right now is ask if there's a caller available for this particular event, because it's a short time, 30-minute event. As we are getting more familiar, once again, we have talked about these things over the last few years. We've called the financial crisis. We have taught many, many people on how to maneuver in these markets around the world. Whether you're a big firm and you need some risk management, this is a place to get it. So get on board now. info@stockmarketfunding.com. All right. I will ask Ryan if he has anyone ready that is ready. Any callers on the air?
Yes. This is Gibson.
Yes, Mr. Gibson. How can I help you?
Well, I'm trying to set myself up. I've got some retirement money. Some of it's limited to mutual funds. Some of it I do have some limited trading capabilities. And I'm wondering how I should set myself up for the new year.
The way that I would go, because we're going to have selling going into this year, and I believe that January 2012 will have a liquidation process, and I believe that people that have gotten into a lot of trouble, that have to answer to raising capital risk dollar injections, meaning that there's a lot of people that are affected by Europe. That means that some of the bigger firms have to sell assets and equities to produce cash. What I would do if I were you, I would not believe in a mutual fund right now because they're going to be part of the ones having, capital reserves based on the risk of Europe have to come higher in our banking system in the U.S. However, around the world, people own U.S. equities. In order to raise cash, they're going to be selling. You would need to go to cash in the mutual fund and let all the selling clear out of the way and get this a little bit behind. You will be at very high risk. Once you own a fund, you have to be out. That's why we tell people continuously on stockmarketfunding.com live videos and trading every day, making as a market maker with the exchanges and everything, and managing risk and managing people in markets that use us, is that they use us for one reason, is how to protect that capital. I'm telling you to go to cash in that thing. Stay out of the way. Contact me about, let's say 2 weeks after the new year. And do not potentially ride this down. Continue to sell your funds in the upside movement. And as far as any other things that you have going, I would recommend that you learn how to use put options that protect you on the downside in case it goes all to the downside, as it will. They're going to be selling equities. And you need to learn how to use index options as puts. You need to use various bear funds that go higher, and you need to diversify the risk with the volatility. Is that a helpful answer?
Oh, that's a lot of help.
It is, and the thing I want you to be careful of specifically is that there will be a time as we go through this where things get on sale, and you'll be able to get a lot better purchasing power than you currently have right now. Raising cash, and cash is king.
Okay. All right, thank you.